Hi everyone, Rich Sassman here with Century 21 Affiliated. It's Scott Swinford over there with Hancock Mortgage. So it's another great Monday. Things are getting, man, our market's going crazy. so,
Our market is nuts. I agree.
I mean, I
Lights
love
are
it.
back on.
so,
There's
uh,
a glare. I gotta put them back on. I can't see.
so, hold on.
Market's getting a little goofy.
There's an error right now, so let's figure out what's going on here. Uh, All right, it's still saying we're live. Okay. So Facebook's being a little goofy today. But having said that, I wanted to start off and talk about something where a financial guru has said something about real estate, and she doesn't have her thumb on the pulse, evidently, or finger on the pulse right now. Susie Ortman said that everybody should wait to buy a home right now because you're not getting the value. Not saying that this is the blanket case, but definitely in Northwest Indiana, that is not smart. Uh, every day, every month that you wait to buy a home, homes are getting more expensive. Uh, the past 4 to 5 years, we've been appreciating it at a minimum of 3 to 4% in value, and we're seeing that continue through even this COVID, where we're in ultimate low inventory right now. There are way too many buyers for way too few houses, and that's only going to drive up the price now. We're
Interest rates. And
yeah,
rates are at the lowest I've ever seen, which is now going to increase people's ability to purchase, and they're going to want to purchase now. So yeah.
exactly. So people are able to afford more of a home now, and it's just insane. She's thinking that it's gonna be like a 2008 situation where there's gonna be a lot of people losing their homes and whatnot, and we haven't seen that. We haven't seen people get in trouble. We haven't seen foreclosure notices coming through. Like people are paying their bills still, and what caused 2008 versus now is completely different. Everything is backed up here. Right, everything is safe as far as we can tell, and it's it's just going to be a more expensive year next year. So, and who knows what the interest rates are going to be doing this time next year.
Well, here's a couple things. Here's my thoughts. One, we've got some of these gurus that are out that have TV shows and are doing these presentations and things that really don't
Hmm.
look at the same way we do. They
Yeah.
want to start saying, well, you shouldn't buy a house unless you have 20% down. You should pay cash for everything else. Um, when you look at it, if you're looking at interest rates, let's say are in the threes or even the fours, I I agree with not having large credit card bills and not having large auto payments if you can avoid it, things like that. But for the most part, if you've got an interest rate of four, which you're paying 4%, and rates are lower than that right now. If you're paying 4% on your home, you could take the extra money that you were putting into it, say that 20%, and invest it somewhere where you're going to
Exactly.
pay home off sooner, or use that to pay off other things. But because they're on TV and because they write books, they seem to have a national audience. But there's a couple things that are kind of wrong with that. And you mentioned a big one. This is not 2007, 2008, 2009. What happened before with the crunch in the mortgage industry was because of the mortgage industry. It was we had folks that were speculating. They were buying homes
Hmm.
built yet in some of the sand states like Florida, Arizona, places like that. They said that they could buy the house for 300,000, and when they got done with the construction, it'd be worth 400,000 because the home prices were going up that fast.
Yes.
And that for a little while until somebody got left holding the bag when they started to go down. So now they've got this house that they paid $300,000 for pre-construction, thinking it would be worth 400, and then when the construction was done, it was worth 220.
Yep.
So they were doing something we call jingle mail, and that's where you take the keys to the house, you drop them in an envelope, and you send them back to your lender, and you say, I don't want this house anymore. I'm way underwater. And that's exactly what happened.
Scott, has that happened at all this year with you?
Because this isn't because of the housing crisis. It's not housing has anything to do with it. And in fact, our housing is driving the economy.
Exactly.
The other thing that they're looking at, too, what they say, and just like Susie Orman had mentioned, that you should wait until the fourth quarter of this year, the last 3 months. So don't buy now. Don't buy now. Well, what we're seeing is that things are continuing to appreciate, and that we will continue to see home prices go up. And you can. The other thing that they're looking at is that ability, because and it's the lost opportunity is what the problem is. So when you have homes that you could buy, and that let's say 3 months up by 2% or 3%, you've lost all that potential equity which you have. And who knows what interest rates are going to do? I think they're going to stay low, but you're losing that opportunity by not purchasing now. And I don't think there is any risk by doing it. I can tell you with the number of applications that we're getting and the number. I had a client put in an offer this weekend. The home went on the market Saturday morning, and they were going to look at the offers on Sunday morning, and I want to say they went 5,000 above asking price and had like 8 or 9 offers.
Yeah, and that's a common thing. And it's not even us underpricing things. A lot of times this is happening on the realtor side where we're going with the higher estimate of your market value, and then we're getting offers above that. So it doesn't do us any good to price you way too high, and then nobody looks at it. But if offers naturally come in above your asking price, that's not us underpricing it. It's us looking at the facts and saying, well, houses have a price for this number, and now we have evidence that people are willing to pay more for your house with multiple offers above asking price on yours. So, it's a great situation all the way around because sellers are getting more than they ever dreamed for their house in Northwest Indiana right now, and it's as long as you're the one with the listing as a realtor, it's easy for to get people through the house right now. Now, as a buyer's agent, we've you have a little bit of a harder time because instead of battling maybe 1 or 2 other people in a multiple offer situation, you're getting the 6, 7 people on a consistent basis. I mean, I've showed a house a same day that it was listed within hours, and it was off the market by the time we unlocked the door. So it's
stories like that all the time, and it's not. The thing about this though is it's not Rich that's pricing the houses.
no.
The market that's pricing the houses, and it's what people are willing to pay.
Yeah, everything. Every time I throw a number out to potential buyers and potential sellers and listing appointments, it's all the numbers are supported by facts, and I give them the facts, which are area homes that have sold in the area. So I can't go off and say, oh, I love your house, so I just think it's worth $100,000 more than the next house. No, everything has to be supported by facts, and the facts keep updating weekly.
Right? The other thing too that Susie Orman had brought up is she said that the home prices are going to go down because she expects a wave of foreclosures, and that when houses are in foreclosure, what it's going to bring down the prices of homes around. Well, there is a possibility that it could, because if you have someone that's going into foreclosure and they park a couple spare cars in the front yard and do and there's deferred maintenance or things like that, then it could bring down the marketability of the house.
Yes.
If you ask an appraiser, when you have a foreclosure, that's considered a distressed sale. They don't use that as the comps when they're calculating the, the, the average cost for the appraisal of the house, and it's generally not looked at because it's not what the actual market is. It's
Nope.
someone who had a problem, they had to sell it low, and so they don't look at that. And that's one of the big glaring issues in the article that Susie Orman wrote.
Yeah, and the only time that she would be true is if the only sales in your area are distress sales. Then that is the market that you're in. But uh, that's definitely not the case. There's, if you've owned a house for more than 2, 3 years, you have a good amount of equity in the home, and you should be able to have room to sell your house and not have it as a distress sale.
Exactly. And
So,
there's some things out there. As part of this forbearance thing that the servicers are getting into,
mm-hmm.
they're doing everything they can to help those who've lost their jobs.
Yes.
Rich, I don't know if you saw on my Facebook page today, but I posted that there is one now for renters, assistance for renters.
Mm-hmm.
So if they're having problems making their rental payments, there's an application that they can file that will help them. So not only is the federal government, now the state government stepped in that assist them, but they're trying to help the lenders who might not be getting paid because of the forbearance. But they're also reaching out to the renters and the homeowners and saying, hey, we understand this is a unique situation. We want to help you as much as we can.
Exactly. It's such a weird time. I think that's the only word I can use. That it's just a weird time that things are happening that nobody ever thought would happen. It's like something out of a Stephen King novel that you're going, yeah, right, that's never going to happen. The U.S. is never going to be under lockdown. And sure enough, this stuff happened. So it's,
I'm kind of disappointed about the murder hornets, but haven't heard anything about them lately. But
oh,
gosh knows you're right. There is enough weird stuff going on in 2020 that I'm going to be glad to put 2020 in hindsight.
exactly. So, but yeah, so let's keep on the same topic, but in a different way, and let's just talk about the market. Um, Interest rates are the lowest that we've ever seen them. I mean, I think that's pretty simple statement.
And almost 16 years, I've locked another one in today for a borrower. The lowest rates that I personally have ever seen in 16 years.
Now, since our last video, the last couple videos, for FHA loans, what's the minimum credit score looking at right now?
Well, we really want to have you over about 680 because that's where the best pricing is going to happen.
Mm-hmm.
We can now go down to 580.
Okay, so we're back to normal.
Yeah, well, let me tell you what about our pricing at 580.
Mm-hmm.
More pricing because there's still a lot of risk in the market
Mm-hmm.
because rates to rate is bad. So we're doing everything we can still to get our clients' credit scores up. Somebody came to me and said, "Hey, I just put an offer in on a house. My bank backed out on me, and I've got a 640 score. Can you help me?" We can.
Mm-hmm.
We can. Probably. It may not be pretty, but we probably can. Somebody says, "Hey, I'd like to buy in a month or two." We're definitely going to look at what we can do to get their scores up. Always going to make qualifying easier, but again, they're going to get some of the best rates. You have to understand too, Rich, that we're in this bucket now, really, really low rates,
Mm-hmm.
because we're not averaging the 760 borrowers with the 580 or 600 borrowers.
Nope.
So we're getting a better group or a better batch of folks that we're doing loans to, and therefore there's less risk in the market. So, like we talked about a couple months ago, where there was one of the bigger local banks who said, we're not touching anything under 700, and we want at least 20% down. So that that's been relaxed. Things are kind of getting a little closer back to normal, where we will do the loans, except the pricing's so bad, it should dissuade you from wanting to do the loan at that interest
Yeah,
rate.
if you have time to fix your credit, get with Scott and he'll help you through the process and everything. But if you need to buy right now, it is possible, and then just refinance.
Yeah, we can refinance down the road. I always want to look at the time frame. We would
Exactly.
never immediately put somebody in something if we knew that there was a way that we could get their scores up. And some of them is
Hmm.
just as simple as paying down credit cards and things like that. That's probably the biggest thing that I see. You have a borrower who has one or two cards and they're at 90% of their limit.
Hmm.
Some $300 $300 maximums. So, if they're at 270, you pay them down to say under $50. So for under $400, you can get those loan or the ratios down very low and see your credit scores jump normally.
Yes. Yeah, and
That's a big thing.
that's one thing. Let's say you're going FHA, so you can put 3.5% down. Uh, and let's just highball the interest rate at 4%. Let's just highball it. And so you're paying 4% interest over the for that loan, and or so that extra, what is it, like 16.5% that you were going to put down by putting 20% down on the house, you can pay off credit cards that have 18, 20, 22% interest, and then that's going to improve your score. Therefore, you're going to get a lower interest rate on that because your credit score is improved. So, putting money down on your house isn't always the best thing. Paying down bad debt is always a great thing. So, high interest
And
is
we're
never
seeing
good.
some. We're doing more, and I'm really more of a purchase money guy. I like the purchases. I like working with the first time home borrowers.
Hmm.
Right now is such an awesome time to refinance. And I'm refinancing one couple who's going to have very little money out of pocket and save them like $180 a month.
Love it.
Well, there's a lot of, and they have really no equity in there because they just bought the house like 7 months ago.
Yeah.
We're going to help them, again, we're going to help them save some money per month. But those have to have the equity in the house. If you remember, I think it was late last year, we were talking about our VA borrower. We put a bunch of money in the bank for him and saved him like $750 a month on his payments. And
Hmm.
paid off his credit card, paid off his auto loan, paid off a bunch of other things, and helped him with a financial plan. So that's a huge benefit right now. Just being able to go in and say, you know what, if you not only can we lower your payments with a lower interest rate, but if we can pull some cash out to help you pay off those higher interest rate credit cards or other loans or things like that, it's going to put money in your pocket. Or if you really want to, do it right, I shouldn't say that's
Hmm.
necessarily wrong, but if you want to go the extreme, take that extra, say, 150 or 200 or $250 a month that you were paying towards those credit cards, and now put that onto your mortgage
Yep.
because your phone may be the only thing you have left to pay. So take what you were putting into that, you know, when you paid off those credit cards and paid into your mortgage, and you'll find out that you'll pay your mortgage and develop equity much, much quicker because you're just basically using the arbitrage from the interest rates. If you're at 3.5 or 4% versus 19 to 24% on a credit card, it makes a huge difference.
Yep. And so this, I mean, especially for FHA buyers who bought 3 to 5 years ago, if not longer, and you still have an FHA loan in Northwest Indiana after that time period, chance I would put good chances on that you have over 20% equity and you could refinance out of your PMI, which that money, who couldn't use an extra 150 bucks a month? Scott, can you use an extra 150 bucks a month?
Sure, if you know
So
my office, just drop it off whenever you get a chance.
Exactly. So the cost of refinancing is nothing compared to the savings that you're going to have. And if you have credit cards or student loans or something, paying an extra $100 a month on those, imagine what that's going to do to uh, your situation. All of a sudden, those student loans that you never thought would go away are disappearing. So that's $1,200 a year extra that you would be
There's
putting
a
on
lot of
that.
opportunity, and that's the big thing is we're looking at is opportunity for our borrowers with this low interest rate environment.
Exa-
And I've got a spreadsheet that we use. We can plug all those numbers in, show you how much you can save per month
hmm
just by paying off the cards. And then if you start taking your money that you were paying on the cards and then increasing your mortgage payment, how fast you can pay those off. But it's not no one borrower is the same as another. Everybody's situation is unique. So I don't want to make it sound like it's we're painting it with a wide brush here. Um, we work with each individual, but I would say that where rates are right now,
hmm
um, just I locked the conventional today in the low threes with locks government VA and FHA in the high twos. So
Wow.
these are folks with really good credit. Their debt to income ratios are in line, things like that. So they're decent to good borrowers, and it's going to save them a whole lot on what they were paying previously.
hmm
Again, I'm not going to have somebody call me up and go, Scott, you said I could get a loan at 2.5. I didn't. It all depends upon, again, your credit scores, your loan values, things like that. Um, but I'm telling you, they're out there and they are available to some people.
Yeah. And yeah, if you just take 6 months to focus in on issues on your credit, you'd be amazed at what that would do to your rates. We keep harping on the stuff in every which way, but it's the truth. I mean, uh, everybody has had negative things on their credit. It's just about what are you going to do to fix it, and everything is fixable on the credit report. It's just a matter are you willing and able to put in the time and effort to fix it.
Or
So,
do you, or do you understand what you need to do to
hmm
fix it? Because, you and I graduated from the same high school,
hmm
me a whole bunch of years ahead of you, but they didn't teach us anything about credit scores or credit reports or even how to balance a checkbook back
no,
then. And I don't know if they did you,
nope,
because my son didn't learn anything, and he just graduated 2 years ago, so he didn't learn that at school.
no.
But I think it's something that we collectively, you and I, like you said, we kind of harp on it once in a while, but I think it's true that we need to be able to get out and educate our borrowers because they will be better off in the long run by doing the right things and learning it early. Hey, trust me, when I hit 21 and got my first decent job, I had that little piece of plastic
I
and
love that thing.
I was just flashing that thing around everywhere. I'm like, you mean you give me these things and all I have to do is give this to you for a minute and then I take it back? And they started making me pay for it. And that really, yeah, I got myself in that position. But again, I was young, living at home and had a decent job. So
Look,
I learned the lesson pretty quickly and it didn't damage me too bad. But there are some folks out there who didn't, who weren't that lucky, who didn't have the
mhm.
ability I did and mess up early and then learn how to handle it. So
And there could also be things on there that uh, aren't your fault, that aren't even yours. So being able to know how to dispute them and how to get them off your record, that's also very important too. So especially people with common names.
very true. And they don't. The credit bureaus don't look at exact because if they did, it would be too narrow, and then they
hmm
may find all the things you got on there. But and in fact, I think I told you a story before, Rich. I had a young lady who filled out the application for her husband, put down his full name, his date of birth, her social security number, and it came back with his credit. So I had heard before that they looked at 7 of the 9 numbers in the Social Security number in case you just pull them up.
Mm-hmm.
Generally the same or similar names in the same area that you're in, like geographically, and then the month of birth. So there is a lot of opportunity out there. Now, I'm hoping that they've changed that.
Yeah.
But there still is a lot of opportunity to have things on there that are not really yours, like you said, especially if you've got a dad who's got the same name or a cousin or someone close. Their information is fairly close to yours. It's not unusual.
Mm-hmm. Oh yeah, I remember as a kid, my mom was a loan officer before she retired from doing that. A lot of stress, but she would always tell me, "Rich, don't name your son Rich Junior," because a lot of crazy things can happen on the financial side of things. Some good, some bad, but mostly bad.
Yeah. Or, when we see that happen, we just want to make sure that we are, that we're including all the identifying information. So,
Mm-hmm.
if your name is Rich, but you've got a different middle name, we want to try to run the credit with the middle name.
Yeah.
So we'll go over the credit report with you and just to make sure that we don't have a mixed report. Say, okay, is this yours? Is this
Mm-hmm.
yours? Sounds correct. Things like that. And, unfortunately, we've seen, and it doesn't happen a lot, but we'll see people client up and they've got 7 or 8 or 10 derogatory collections on their account. So this one's from Comcast, so I've never had Comcast. My dad had Comcast.
Ding, ding,
Where,
ding.
yeah, right, where there'll be someone else's information on there. Or we had one where the young lady was, I would say 16 or 17, and her mom used her identifying information to take out I would say it was for AT&T or Comcast, one of those two, and then defaulted. So when we went back and looked, we said, hey, this happened 3 years ago. She's like, I'm 17. I can't sign for it. So it ended up being, do you want to prosecute? Because you can't prosecute. She's like, yeah, I want to. I said, so you're going to put your mom in jail. Okay. But it's not, again, we don't see it a lot. It
No.
happens very seldom. Things do happen.
So, but yeah, other than that, we just want to debunk some of those things and give some good credit advice and how to improve your credit. Other than that, Scott, you got anything else that you want to say?
I think we've covered a lot today. And, I just want to say that I appreciate you doing these videos so we can get out there, get the information out there to our clients. The market is absolutely smoking hot right now. Interest rates are incredibly low. If you're going to go out and hopefully start looking at homes, you need to be pre-approved. You need to have your own officer, hopefully it's me, have all of your information so that if you call up and say, hey, we need to put an offer on this house within the next hour, that you, Rich, you can write it up. And I know you're very proactive about doing that. But,
Mm-hmm.
and what we need to give you that pre-approval to help you put that home because they are going incredibly quick once they hit the market.
Oh yeah, I'm especially with houses under 200,000. I'm writing up contracts to have at all the showings. That way, if they want to jump on the house, we can jump on it. I can scan over the deal to the other agent from my phone while we're still in the house. That way, there's no time wasted. And with that, that's also me calling the lender. Scott, how many calls do you get from me saying, "Hey, I'm going to show this house. Can you get a letter ready?" So,
Well, and but it's what we're here for.
mm-hmm.
I was running emergency applications on Saturday. I got a call at 8:30 on 4th of July. I wasn't really doing much of anything, so I answered the phone. Helped the young lady out, answered her question. I think she's going to end up purchasing at some point. But it's that market where that I'd like to say that I work quote unquote banker's hours. I'm here 8:30 to 5 Monday through Friday, but in reality, just like you, we're working weekends, we're on call on holidays, we're out there to do what we need to do because that's the environment that we're in right now. We have to do that for clients.
Yeah, and this thing has made us 24/7. I think it's that simple. But yeah, but a little good news is hopefully over the next couple days, I am uploading all the past Mortgage Tip Mondays to YouTube. You can find them on my YouTube page, NWI Realtor Rich. And so I'm in the process of uploading 22 of them, editing them all up, so you can get some good information if you've missed one in the past. So this one has been episode 22 of the uploads. So, and I'm not even including our early ones.
Yeah, we've done far more than 22.
We're over the 50 mark on it. So, but yeah, so we got that. Or you could go back in my profile and look at each week that we've done. They're in my profile videos. I'll never delete them, so you can always take a look at them. But yeah, so I'm getting my YouTube channel up to par for everything. So if you know anybody that can use this information, please share it with them. Other than that, this has been another Mortgage Tip Monday. I'm Rich Sassman with Century 21. That is Scott Swinford with Hancock Mortgage. And I hope everybody has a great week.
Thanks, Rich. Have a good one, folks.
Woo!